Let's talk about the $1 million question. And no, I'm not talking about a game show. I'm talking about retirement and that big, shiny, and let's be honest, kind of intimidating goal of saving $1 million. But how realistic is that number really for most of us? Well, let's dive into the data. Okay, so first up, some news that might actually surprise you. As of the second quarter of this year, a record-breaking 595,000 Americans have over $1 million sitting in their 401k accounts. That's an all-time high. But, and trust me, this is a huge but, those $1 million accounts are the exception, not the rule. That really impressive headline, it's hiding a much more complicated and, honestly, a much tougher reality for most people out there. So to really get what's going on, we have to look past the flashy headlines. The real story is actually hidden in the difference between two simple little words, average and median. And this is the key to understanding the true picture of American wealth. All right, let's break this down. The mean is the average we all learned about in math class. But the problem is it gets totally skewed by a few super wealthy people at the top. The median, on the other hand, is the true midpoint. It's the number where exactly half the population has more and half has less. It gives us a way more realistic, way more honest look at the typical household. And boom, this table just lays it all out perfectly. This is data from the Federal Reserve. Just look at any age group here. For folks younger than 35, the average net worth is over $183,000, but the median, the reality, is just $39,000. Or look at those nearing retirement, 55 to 64. The average is a massive $1.5 million, but the median? It's way down at about $364,000. I mean, that gap is just huge across the board. Let's just zoom in for a second on that 45 to 54 age group. These are supposed to be your peak earning years, right? Well, the average net worth is flirting with $1 million at over $971,000. But the median, the reality for the person right in the middle of the pack, is just under $247,000. Think about that. The average is nearly 4 times the median. It just goes to show you how a small number of very wealthy households can completely warp the picture for everyone else. Okay, so why? Why is this gap so massive? Why is it so incredibly hard for the typical household to build this kind of wealth? Well, it's because most of us are stuck battling something we can call the financial vortex. So, what is this financial vortex? Think of it like this powerful, swirling force of competing financial priorities. We're talking about the huge costs of housing, childcare, healthcare, student loans. All of it is constantly pulling money away from those big, long-term savings goals, like retirement. And look, this isn't just some vague feeling people have. A survey from Goldman Sachs shows this vortex is very real, especially for younger generations. A jaw-dropping 75% of millennials and 72% of Gen Z say these competing priorities are holding them back from being able to save. Even a majority of Gen X feels the squeeze. And we're not talking about small expenses here. The core components of the so-called American dream now come with these absolutely mind-boggling lifetime price tags. Let's just run through a few of them real quick. All right, first up, homeownership. Based on recent data, the lifetime cost of just buying and maintaining a single-family home is nearly $1 million all by itself. Wow. Next, raising a family. If you want to raise 2 children and help them get through college, that's another massive expense, coming in at over $876,000 over their lifetimes. And finally, just getting around, the lifetime cost of buying and maintaining new cars for a household, another $900,000. So when you start adding these up, you can see exactly where the money goes. It gets pulled right into that vortex. Okay, I know that was a little grim, but it is not hopeless. Far from it. Now that we understand the challenge, let's pivot and talk about the solution. Because building wealth isn't really about chasing some magic number. It's about following a process that actually works. So how do you do it? Well, according to financial experts, it really boils down to 4 key principles. 1, be consistent. This is a marathon, not a sprint. Slow and steady wins the race. 2, buy appreciating assets, things like stocks and real estate that make money for you. 3, and this is a big one, stay calm when the market gets rocky. Don't panic sell. And 4, use your workplace plans like a 401k to the absolute fullest, especially if your employer offers a match. That's free money.
I absolutely love this quote from Sam Stovall, a chief investment strategist. He says stock market history can serve as virtual Valium, since it can help you sleep better when you know how quickly the market tends to get back to break even from declines. It's such a powerful reminder that panic selling during a downturn is one of the worst things you can do for your long term wealth.
So, all of this brings us full circle to one final crucial question. We're going to challenge the very idea we started with. Is $1 million even the right number to be chasing in the first place? What's really fascinating is that this magic number is a moving target. A recent study found that, thanks to inflation and other pressures, Americans now feel they need about $1.26 million to retire comfortably. It's a number shaped by perception and the current economic climate. So here's the final thought. After seeing that huge gap between the myth of the average and the reality of the median, and understanding the financial vortex we're all fighting against, the real question isn't about some magic number from a media headline. It's about looking at your own life, your own goals, and figuring out what's your magic number.